Friday, March 10th, 2023, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at whether the banking sector is starting to topple over. We've looked at the banking sector a couple of times in the last 3 months. Last time was in December. I spoke about cracks are starting to show in the banking system. And then on the 22nd of February, I spoke with John Titus and we looked at FDIC data, and he told us that the banks had started panic borrowing back then. So that's what we're going to look at. Before we start, just wanted to show you how Rudy's doing. Some of you have asked how he's doing. He wasn't on the video yesterday. He was on the sofa earlier today, but he just jumped off. So here he is. He's growing very quickly. He's a bit of a rascal. He's learning. So now I'm going to put him back on the floor and then we'll start the report. So back to the banking sector and the fact that, yes, banks had a very tough time yesterday. And we had some interesting news concerning the Epstein case. Jamie Dimon, JP Morgan, John Staley, who used to be the banker for Epstein at JP Morgan, then became the CEO of Barclays. So there's a U.S. Judge that ordered JP Morgan to turn over records, Jamie Dimon's records, in order to facilitate the case with the Virgin Islands. So we saw that come out yesterday, and as you can see here, the JP Morgan stock took a big hit, very big hit. And apart from that, as I said earlier, I spoke to John Titus back on the 22nd of February, and John Titus, he has a great channel called Best Evidence, and I really recommend you check that. And a few years ago, he did a video about how the too big to fail, they never get criminally indicted because they're too big to fail. And we have to wonder if this is going to change now with JP Morgan. But apart from that, the other thing about the banks, and I've been harping on about this for quite a few years now, is that a lot of the banks are highly leveraged. They haven't been really reformed. The underlying problem with the banks is exposure to derivatives, especially the big banks like JP Morgan, Citigroup, Bank of America, Morgan Stanley, Goldman Sachs. They have hundreds of trillions of notional derivative exposure, And derivatives, of course, are basically leverage bets on underlying securities. And most of the derivatives in the world, the majority of it is on interest rates and swaps and bonds, government bonds. And we're seeing how volatile government bond market is right now. And as I said, I've warned a couple of times. I spoke to John Titus. John Titus noticed that there's been a run on the bank, so to speak, the minor league Federal Reserve. He calls it the Federal Home Loan Bank. And it's interesting because a couple of days ago, Silvergate Bank, the crypto bank, collapsed. I was reading about it the day before, and it looked like they borrowed money from the Federal Home Loan Bank. So John Titus has been right. And at the time that I spoke to him, we looked at the FDIC data, and we spoke about how the banks were making huge losses. And at the time, they only had the data up to September, third quarter. But now they've got the data also for the fourth quarter, and it hasn't improved, as you can see. The blue bar is losses on securities held to maturity, and the brownish color one, or beige, is losses on securities available for sale, as you can see. and it's improved a little bit. There's not as big a loss. I think we were around 690 billion at the end of the third quarter, but we'll have to wait, of course, for the first quarter data. It's not out yet, but the thing about this chart that makes you like look at it and say wow is that these are huge losses. We haven't seen losses like this, not even during the '08 crisis. We saw some of it, some losses here in the run-up to the repo crisis, I guess, in 2019. But these are huge, and they're starting to seep through into the markets. And as we are a credit-driven economy, consumption-driven economy, not just in the United States, but here in the UK as well, service sector-driven. I mean, here in the UK, manufacturing and industry has been hollowed out. And I think the same thing is happening in the US, especially after China joined the WTO, the beginning of the century. And even before that, all the outsourcing and financialization. So if the sector that provides the credit for the economy, i.e. the banking sector, is in trouble, you could argue that the economy might be getting into trouble. So I think that's what's going on. There's a lot of things there, and plus the fact that the Federal Reserve has remained quite hawkish as well. And yesterday also we saw first sign of the job market maybe turning south. We saw jobless claims jump quite a bit above 200,000. It was expected below 200,000, so that didn't help things either. So yes, I recommend you watch my interview with John Titus back from the 22nd of February. I'm going to put it up in the cards. And John Titus always looks at these things in a way that very few people do. And I think he's right on the mark about the banking sector being in trouble. The charts don't lie. And I also recommend you watch a video I did at the end of last year in December called Cracks Are Starting to Show in the Banking System. So am I worried about the banks? Not really, because I've been leading my finances in a way that I keep as little as possible in the banks, or at least in my account. I've been stacking for a long time, as some of you might know, and stacking just means buying gold and silver and keeping it outside the system. So for those of you who have been following me for the last few years and have done the same, have decided to do the same, because I never tell people to do anything. I just tell them what I'm doing. I give them the reasons for it, and if they want to proceed, they need to do their own homework. And that's the way I operate as well. When people talk to me about things, I look into it before doing anything. So is this it? Is this the black swan, the banking sector melting down? I don't know. Back in 1933, it was a banking collapse really that led to many things. One of them, of course, was the bank holiday that FDR instituted when he was inaugurated in March of 1933 for a week. Another thing that happened was Executive Order 6102, making Americans bring in their gold to their local Federal Reserve branch and basically banning gold. Am I saying this is going to happen? I don't think so, but you never know, because governments can do anything. The probability is not as big because back then we were under a gold standard, or the US was domestically, but now very few people own gold. But those who own gold and silver outside the system and do not have a huge exposure to the banks, they shouldn't be worried, just like I'm not worried here in the UK, because I don't have a huge amount of fiat balances with the banks. What about the question of the FDIC? We're supposed to have FDIC insurance. Well, I looked at FDIC the other day. Their assets are about 125 billion. So if there is a systemic crisis, like a lot of banks in trouble, and a lot of banks failing, the FDIC funds would would not suffice. Yes, FDIC fund will probably work for Silvergate Bank that failed a couple of days ago. There's about six. It's a small bank, but if it all snowballs and we see J.P. Morgan and other banks in trouble, just like we saw in '08. The FDIC insurance is like insignificant, I would say, and so would the FSCS insurance in the UK be. And that's why I want to give a shout out again to my partners in the precious metals space. We've got ITM Trading and Miles Franklin in the US and Gold Investments in the UK. They are the people that I've partnered with for the last few years, especially Gold Investments. If you looking to maybe get a little bit of precious metals, look below in the description for more details. And also there's Glint, which is kind of a hybrid. They do hold your allocated gold in Switzerland, but it's a digital deal. So some of you might want to look into that. GlintPay. Their details are also below in the description. So yeah, things are getting very interesting, and we're going to keep an eye on the banking sector. I would say this index here, the KBW Bank Index, that's the one to keep an eye on. As you can see here, it's come off from around 150. When was that? Beginning of 2022, and now we're testing the lows from October last year. That's when the stock market bottomed. It's no coincidence that if the banks are not doing well, the stock market is not going to do well, the economy is not going to do well. So yeah, KBW Bank Index, keep an eye on JP Morgan as well. It seems to be leading the way. And with that, let's quickly look at where the markets are this morning. It's 8:23 a.m. London time. So we've got spot gold, 1833. It's up a couple of dollars. So gold did very well yesterday, despite actually the stock market not doing well. Even silver held up really well. Relatively well, I would say. The high overnight in gold has been 1837 and the low has been 1827. Silver is virtually unchanged. It's down a couple of cents at 20.04. High's been 18, the low has been 19.88. So how is the stock market doing today after some hefty losses yesterday? I see the Dow is down over 1.6%. S&P was down almost 2%, and the NASDAQ was down over 2%. Well, the Dow futures right now is down 200 points, or 2/3%. NASDAQ 100 future is down 1/3%, or 35 points. And the S&P is down 0.6, trading below 3,900. So things are not great this morning here in London for the markets. We've got sterling in terms of the currencies. Sterling is virtually unchanged at 119.29, and we saw sterling and the euro rebound yesterday, so the dollar took a bit of a hit. The euro right now is unchanged as well. The dollar's up slightly versus the yen here. It's up 0.15 at 136.36. Dollar's unchanged versus the yuan. Aussie dollar is down about 0.2 versus the dollar at 65.80. And the dollar's up 0.25% against the Canadian dollar, 138.57. I saw that the Bank of Canada left rates unchanged, so that might not help the loonie going forward, seeing that the Fed is still relatively hawkish and looking to raise rates on the 21st of March. It could even be 50 basis points. So, and the Kiwi dollar is unchanged at 61.03. Look at the general commodities. We got platinum trading down $10 today, and it's at 938. WTI crude is down 1% at 75.04. Brent crude is down 0.75% at 80.76. And high grade copper is down 1.6% at 397. So we're going to look at the bond market, and we're seeing yields drop relatively quite sharply, actually, especially overnight. We've got the 10-year yield down 10 basis points, which is a big move for the Treasury market, especially before the U.S. comes in. And of course, the Treasury market trades worldwide almost 24 hours, the cash market. So it's at 382 right now. And I also noticed that the 2-year is down about 10. So the market feels that there's something wrong, not just with the banking sector, but maybe the economy. And of course, today we've got non-farm payroll data, the jobs data from the U.S. And it will be a very interesting number. If it's a stronger number than expected, we could see bonds actually, bond yields rise again, and we could see the stock market continuing to go lower. So very interesting here. So it looks like the bond market is seeing trouble, not just in the banking sector, but for the economy. And let's quickly look at the UK gilt market. That as well is following the US Treasuries. We've got the 2-year gilt yield down 12 basis points at 3.68. The 10-year is down about 9 at 368. And the 30 years down about 6 at 405. And we did have some data from the UK, GDP data. I mean, they weren't really great. The 3-month change in January of GDP was flat, so economy didn't really grow on a quarterly basis. It did grow on a monthly basis in January by 0.3 compared to an expectation of 0.1. So nothing to write home about. We did have some industrial production numbers. They were worse than expected. Manufacturing numbers also were worse than expected. So not really seeing any signs of life in the UK economy for those who have been asking me. So with that, I'm going to wish you all a very good day. Take care. Bye.